The continuing tensions in the Middle East is causing some concern for global equity markets. We did see overnight that equities have been mixed, particularly out of Europe and the US, and again this is about the concerns that we may see for increases in oil prices. Last night we also saw oil prices lift again, but not quite to the levels that we have seen through last week. However, speculation continues that we could continue to see oil prices lift, and $150 per barrel is not out of the question. Of course, this could have some impact on the global economic recovery as consumers aren't able to adjust their spending patterns and they do need to get their fuel in order to get to work. The other key announcement that we saw yesterday was from the Reserve Bank of Australia, who didn't change their overnight cash rate. This did see the Australian dollar fall, and the New Zealand dollar also fell off the back of this. On Wednesday morning, we are trading just over 75 cents against the US. Since the Christchurch earthquake last week, we have seen New Zealand wholesale interest rates fall quite rapidly. This is mainly due to the concerns of what the earthquake impacts will have on the New Zealand economy, but also the potential for the Reserve Bank of New Zealand to drop the official cash rate at their next announcement. They are making an announcement on the 10th of March, and we are picking that we'll see a 50 basis point drop in the official cash rate. Of course, this would see short-term interest rates fall and would help out farmers out there in the field. Over the past week, we have also seen term interest rates fall quite rapidly. The Reserve Bank has two things to consider. The rate drop could potentially be a reason for an emergency cut to try and help some short-term stimulus. The second reason is that we have started to see the New Zealand economy weaken recently, and so there is some concern that this is needed at the present time. Of course, we would start to see interest rates fall, and this would benefit farmers in the short term. The latest global dairy trade auction, which was held overnight, once again showed strong increases for dairy commodity prices. On a trade-weighted basis, prices were up almost 6%. Whole milk powder was the biggest mover, increasing by almost 10%. And putting into context some of the increases we have been seeing recently, just from the beginning of December, whole milk powder prices have increased by almost 30%. These very strong increases are likely to have a bigger impact on next year's payout than the current season. While the outlook does remain strong, we are forecasting that next season will be very strong once again. The increases we have been seeing recently indicates that we're seeing some stability in the market and will have some flow-on effects down the track. We're now forecasting the 2012 season will be likely to increase and once again be over $7 for the payout.